Devika Mehndiratta, Senior Economist, Asia Pacific, ANZ. She joins us from Singapore. Devika, hi, morning. Firstly, your view on how the US economic data has been off late and expectations from the upcoming FOMC meet. What do you think the Fed is going to do on interest rates?
I think the data out last night has been broadly positive, not just from the US. Even if you look at what, the PMIs that came out from the Euro region, the fact that continuing claims came down lower than expected, that's positive, and it shows that, this employment momentum is reasonably strong. Of course, new home sales disappointed, but that's a pretty volatile series. I don't think markets are reading too much into that yet. Going into the FOMC meeting next week, I think they're going to continue, of course, with the regular $10 billion tapering thing. And in addition, it's too soon right now, I think, for the Fed to really change its forward guidance. We do think, however, there's this very slight risk in some sense that when they're talking about employment, that the Fed might acknowledge the fact that employment is picking up more strongly now, and markets might read into that as as an indication that there is this risk that the Fed can begin a normalization of rates sooner than what people are penciling in right now.
Devika, so the data from US is strong and it is on expected lines, but the surprise factor has kicked in from China. The Chinese GDP data and the Chinese PMI data, which came earlier this week, seems to be indicating that China is out of the woods.
Well, I won't go so far as to say that it's entirely out of the woods, but yes, it is assuring. The Chinese government is trying to create this very fine balance, it slows a bit, then they do a bit of stimulus, and now it seems that I would say it's sort of stabilized. I wouldn't really say it's entirely out of the woods, but yes, it's assuring. That's what I would say.
Devika, what's the view then on the kind of data that you're seeing from India right now, and what's the view on what the new government has done so far?
I think, again, broadly positive on India. In fact, I would say that as far as, if you were just to keep the rainfall aside for a minute, I would have said that India is in a bit of a sweet spot right now as far as the growth inflation mix is concerned. And the second half, for instance, you have now, after quite a long wait, we have started seeing incoming data. For example, let's say auto sales, the PMI services, and all of those come in the right direction. It's all happening very slowly, but it is happening in the right direction. So that's on the growth front. Inflation, I think the big positive is that the most recent numbers that we got, we were all expecting, of course, a drop because there are favorable base effects and all of that. But core inflation also softened after a very long time. It's been high and sticky. So I think that's definitely a nice welcome surprise for inflation in India. So sweet spot, and of course the problem is that we have had rainfalls being extremely deficient. Yes, they've picked up in recent weeks, but the fact is that your summer crop, the sowing has been impacted. So I think there will be some impact on agricultural growth, and hence, there is this bit of an upside risk that has come on inflation as well. But overall, I think things are moving in the right direction. A bit of a dampening coming in from the monsoons, though. I'm sorry, you asked me also about, what we think about how the government, the action that they've taken. The budget was quite disappointing to us, but I don't think it's going to derail things or the overall story. They have been, other than that, been doing these little steps, and which has shown that they are being decisive in their decision making. The steps themselves aren't particularly fascinating, but the fact that it's happening quickly, that pace is coming in, I think that's a positive. Which is why we do feel that yes, the recovery is taking shape. It's gradual, but moving in the right direction.
Devika, the new government has completed little over 2 months. Which is one important government decision which, to your mind, has gone down very well with institutional investors?
I think there are a couple of them. One is the fact that they, quickly delivered the railway fare hike. So all of these added up. The fact that the FDI in insurance and defense, it wasn't anything new. It's the previous government which had started off that process, but the fact that they quickly got it through, so I think it's more the speed and the decisiveness of the decisions rather than the decisions themselves. I think another thing is, when we talk about in the budget, the one thing that was positive was what they've done for infrastructure sector in terms of lending, trying to encourage longer term, by making them exempt from the CR, SLR thing. So I think that's positive. So I think it's a little bit happening in a lot of different directions. Nothing is huge, but it's happening decisively, and that's what's important.
So, Devika, post the election outcome, the India rhetoric has changed. India is no longer considered as a weak link in Fragile Five. In fact, India is the market of choice for global investors. Do you think the outperformance with what Indian stocks have exhibited of late, is that here to stay?
I think there is outperformance, I'm not too sure, but I think yes, overall the positive spin is likely to continue. We can't be absolutely oblivious to any sort of a pullback. I mean, I think there is, I'm not a stock market expert, but I think there is quite a strong likelihood that you should see some amount of consolidation coming in, because you have seen a fairly strong run up, and then the fact is at some point, the monsoon, when it does, when I think markets start realizing, okay, that for example, the RBI is not likely to be able to, do any significant amount of easing. At some point, that reality is also likely to sink in. And I think some bit of consolidation is likely, though broadly, yes, the trend should remain positive. The other sort of wobble, I would say, that one needs to be alert about is the fact that, down the line, if, let's say, there is this risk that the Fed starts normalizing rates sooner than expected, that can again cause a bit of a wobble. I don't think it would derail things, but these are things one needs to bear in mind, when you talk about the outlook for your, performance of stocks.
Okay, Devika, good chatting with you. Good to have you on the show today. That's the view from Devika Mehndiratta from ANZ.